The trade war has raised a number of important concerns for the US and China to negotiate, including jobs, deficit, and growth. So what do Americans, American businesses, and leading global figures say about the dispute? Larry Summers, former US Treasury Secretary, says that the American strategy should be to pick the US up, not to hold China down. He recommends stepping up investment in infrastructure, commitments on basic science and human capital in community college education. Joseph Stiglitz, winner of the Nobel Prize, says America's been saving too little, jobs will disappear, and prices of goods will rise. While Paul Krugman, another Nobel laureate, explains that trade wars aren't good or easy to win, even if you know what you're trying to accomplish. Far from being a closed market to the US, there are today 68,000 American companies which manufacture, distribute, and sell goods in China. According to Deutsche Bank, China's subsidiaries belonging to these American companies sold $223 billion worth of goods in 2015 alone. This $223 billion figure is not calculated into the US-China trade deficit. Likewise, independent economists challenge the deficit being claimed by the US government at $335 billion. They say the accurate figure could be as little as half of that. The US Chamber of Commerce, the world's biggest business organization, says on its website, "Trade works, tariffs don't." The chamber predicts that the tariffs will cause extremely significant damage to conservative-leaning states including Idaho, South Dakota, Alaska, Louisiana, Alabama, and South Carolina. Jamie Dimon, CEO of JP Morgan Chase, agrees with many of the issues that the US government has raised, but he says its approach is wrong. In an interview, he explained, referring to the tariffs, "I think you're getting pretty close to reversing some of the benefits you've seen in the economy." That view is echoed elsewhere by some of the most recognizable and trusted American brands. 3M is bracing itself for a $10 million hit. Harley-Davidson is earmarking extra costs this year of up to $20 million, while General Electric is anticipating up to $400 million in raised costs. Nor will the damage be limited to the US. IMF Managing Director Christine Lagarde compares the outlook for the global economy to what she calls clouds on the horizon getting darker by the day. The biggest and darkest cloud, she says, is the deterioration in confidence.